Welcome to the Future of Payroll and Workforce Management Insights by HR.com, your go-to resource for insights into payroll and workforce management. From navigating compliance and technology trends to exploring the latest in global payroll solutions, we're here to keep you ahead of the curve. Join us as we dive into the forces reshaping payroll and share practical strategies to optimize your workforce management. Let's get started. Well, hello everyone, and welcome to the latest episode of Future of Payroll and Workforce Management, a podcast by HR.com. I am your host, and at HR.com, I'm an executive community leader of our Future of Work community. But enough about me. My guest today is Brian Slowik. Welcome, Brian.
Hey Brent, thanks for having me. We've had an interesting week and a busy week, so it's good to be together.
Yeah, it is. It is. Paycon, the 43rd Payroll Congress was this week. And I think each of us, we live in different areas of the country, but we each got home around midnight yesterday, which was kind of fun. And we sat down impromptu yesterday at a coffee shop and had a really interesting conversation around FinTech and how it intersects with payroll. And we're going to talk about that in a minute. Now, I like to start off every episode by just asking my guest, what is your role at your organization, and also what galvanizes you every day to do what you do?
Well, thank you, Brent. First off, again, thanks to HR.com and to you for having me. Uh, Again, my name is Brian Slowik. I am SVP of Wage and Corporate Disbursements at Green Dot. I'm also a Rapid Paycard co-founder, and we started Rapid in 2003 out of a construction staffing company that then became part of a large labor retail staffing entity called True Blue. And in that world, 10 years in that world from 93 to 2003, we had 99% unbanked workforce. So we were looking for something to solve that problem of people needing checks and everything associated with checks at a time when there was direct deposit available, but they didn't have bank accounts. So what galvanizes me is solving problems for the end user. And then back in the 90s, it was getting people that can't get bank accounts into a system that would allow us to leverage um, direct deposit, for the lack of a better term, and to do it in a manner that it solved the problem for the user of still remaining, I don't want to say anonymous because we're not anonymous, but not with the fear of they're going to lose their money for whatever reason, or that they're going to be that the trust would remain that they had some capability to use their funds in a fashion that they wanted when they wanted without a significant amount of fees. So empowering that end user to move into a newer environment, away from the old paper environment, and have better utilization of their money. And that carries forward to today. So we started Rapid Paycard in 2003. It really took the advent of the debit card gaining acceptance, which didn't really happen until about 2006 to 2008, when you and I discussed people getting used to having a debit card for a gift card or a debit card associated with their bank account, recognizing that Visa or MasterCard logo on the card didn't mean it was credit, etc. And that didn't really catch fire until 2008. And then after that, it started to really take off in about 2009. We became Rapid, became part of the Green Dot organization in 2017. And at that time, the Green Dot organization, who still owns the Rapid platform product line, was had just solved a major issue for the gig workforce, predominantly Uber. and Uber had a recruiting and retention problem that centered around uh, people being able to operate because they're 1099 employees and they're having to operate their own business out of their fares. And they needed to have accelerated pace to paying those employees to keep them on and to have that the retention as well as be able to recruit. So we were able to establish the platform that allowed them to get paid up to 5 times a day instantly. And then at that stage, since we are the part of Green Dot that goes business to consumer and selling to W-2 employees, they look to leverage the technology into the W-2 workforce. And that's when Rapid was brought forward to, since we're calling on payroll, we're calling on HR, to begin to evangelize the basically direct to debit platform that was put in place to that W-2 workforce and do it through earned wage access. And just like Paycard in the early days of 2000s, where nobody really knew what it was, it wasn't very much accepted. We're going through the same process again. It's almost deja vu in the aspect that even the way the acceptance is happening within the payroll and HR profession is similar. First off, really a just kind of pushback. My people won't accept that kind of approach. Then to okay, maybe we have to accept that, and then on to the point of where it is accepted, and it starts to get utilization, and then it gets the attention of whom? Regulators. And maybe you want to
Yes.
stop there, and we can go.
Yeah. Thank you. That's a great segue, and I just want to bring up a couple things. So first of all, thank you for the great sort of like a for instance, a for example that really illustrates the history of this of fintechs sort of getting incorporated or weaving its way into the payroll world, which is really interesting. You talked about this could be an entirely another episode of the podcast. We won't get into it today too much, but I just want to just touch on it. You talked about trust, and that's so important for employees to trust that they're going to get their pay on time and it's going to be usable when they need it, right? When they're expecting, when they were told to expect to receive it, they need to know that it will indeed be usable at that time. And also that empathy that's sort of implicit in that, that there's an empathy in this space where you're helping these people get their pay that they worked for. Um, Before we get to the regulatory stuff, which is going to be a big piece of this, let's back up just a little bit to yesterday and the day before yesterday, really. There was a big fintech presence at Payroll Congress. For those that don't know the name of the Congress, we call it PayCon for short. But it was the 43rd year that they had it. And this year there was a big fintech presence. And it just struck me, I kind of had a little bit of an epiphany. It started before I went to PayCon, sort of, in the past couple months, but it really kind of solidified is this idea that and there are some limiting factors or some impediments or some variables that are going to make this interesting. Let's put it that way. But to me, it seems like the technology has finally gotten to the point where we have almost the surfacing or the emergence of two different customers when it comes to payroll. One is the employer, and the other is the employee. And for the longest time, both have fallen under the aegis of the payroll department. And it's really been because, well, okay, yeah, you're the payroll department. This is the employer paying the employees. It kind of makes sense from a 100,000 foot, 50,000 foot view, right? But also the limitations of the technology in the space and some of the attitudes in the space also kind of just everything fell under it. But when you really think about it, the most natural customer of the payroll department is probably first and foremost the employer. The employee gets paid and that's important because if they don't get paid, then they're going to leave. But this is an entirely different animal, and those are individuals, and there's only so much the payroll can do to cater to that other stakeholder. And so as fintech technology has evolved, and gotten more, has modernized and become more immediate, right? It's almost as if a different demand, provider of the demand can cater to that other stakeholder, the employee. What are your thoughts on that? And then we can get into the regulatory stuff, which is a whole ball of wax that kind of figures into this.
Well, I think you're right. This is the better place to stay for a bit to build the context to the regulatory. My thoughts are exactly what you laid out, is that essentially everything, whether it was pay card or whether it's CWA, um, first starts with the business, then moves to the consumer, therefore B to B to C, right? Versus my parent company is business to consumer direct, right? And what was interesting about Paycon this year is you had not only FinTech, which we consider ourselves really one of the Green Dot, one of the originators of FinTech, and also the only FinTech that actually has a bank. So that is a critical component of our solution, and the fact that we have a bank that can be leveraged, that becomes important regulatory wise going forward. Uh, but you also saw at Paycon this year, in fact, I had some payroll managers and payroll personnel saying, I'm disappointed at how many fintechs are at the expo floor, because they felt as though there were not as many independent just payroll providers or payroll technology. Uh, I think it just was that the fintechs crowded out, or were so big that it looked as though there were less, but there were definitely, I think, probably 50 to 60% more fintechs this year. And also, some of the fintechs that were on the floor historically were not business to consumer products. They were business to consumer direct, that came into the W-2 workforce for the first time. That'll be interesting to see how that plays out, uh, because there are issues that happen at times when you uh, market to a business. For example, this is really easy. Brent, you in payroll or HR, you just have to endorse the access to this particular product, whatever product it may be. I'm not speaking about our product right now. And then everything happens outside of you, so it's hands-free, easy peasy, and you're good to go. Well, it never ends up that way, because when something happens with the product that you, and we're going to be using air quotes a lot today, right? Air quotes, that you endorsed, you've really kind of put the employer stamp on it, and they're going to come back to you to help solve whatever issue happens, whether it's a service issue, whether it's a problem, that lack of trust starts to erode, or all of those things. It ends up falling back into your lap as the payroll professional or the HR professional, even though you thought, oh, it all happens out here. And then it also brings in the regulatory aspect that we'll bring in later, which is once you have an employer or a business endorsement, then the regulators view it as, doesn't matter whether it all happens outside of you, you endorsed it, so you're involved, which was a very large part of when Paycard first went through this regulatory exposure, that you can't, because some entities used to say, I'll just send them down to the local Walmart and they can pick out whatever product they want, and it becomes their issue. And what regulators would come back and say in Paycard, I'm talking 2008 to 2011, basically before Paycard regulations really became emboldened state by state. Uh, they would ask, well, do you require them to have a methodology for direct deposit? Yes. So the ones that don't have their own bank account, I send them to the Walmart. Well, right there is the implicit direction that they must get a product. So then they would say, come back and say, well, you're using a product that's non-compliant for pay card or payroll,
Mm,
which is on pay
mm.
card. We of course have to give all kinds of free and clear access to the employee's pay. You can literally use a pay card completely free, and we as a company provider would make no money. So that's usually the restriction that ends up happening when you're business to consumer. And when you're business to consumer, you can have a fee for everything. And it's interesting in the aspect that what regulators often do is force a company or a fintech when they're selling through an employer vertical that you have to give away fees that banks don't.
Okay, yeah,
So,
yeah, interesting.
which
Eh,
builds into our greater conversation that we're going to go to, which is what happens in the future.
Yeah, and that's really interesting to me, right? Because there's that and it's incumbent upon the pay card provider, the fintech that's providing that to ensure to make sure that what it's offering, what it's making available to the employee is available in a compliant way, in a way that's compliant with existing pay related regulations when it comes to employers paying their employees. And that's really interesting to me because it's, it's and that's probably always, well, let's never say always, right? But that's going to be there for a long time. It's just this has been a building sort of accumulating framework, regulatory framework since at least the days of the FLSA back when it was initiated, or its origins in the 80s, right? And so this has been around for a long time, and W-2 employment isn't going away anytime soon, although it's not the novelty that it was back then, right? Or it's not going anywhere anytime soon. And so you have all these gig workers that have that you can cater to differently, right? And then there's all sorts of regulatory action around that we've seen in the past few years, pertaining to, I believe it was Uber and a couple of others, right? But maybe you can talk, if you could speak a little bit, even sort of philosophically, but specific examples would be good too. How is the regulatory framework going to factor into this calculus, right? Because it's definitely going to look different. The payroll ecosystem, if you will, right, is going to look different. I think it's going to be 5 years from now. It's going to be much different than it was 5 years ago, right? And so you have this situation where employees have much more choice, and that's good for employees, right, to get paid the way they want to. Um, how is how is the regulatory framework going to influence this and affect this?
Well, back to your fair uh, Fair Labor Standards Act, sorry, is really the interesting part, and it does go really all the way back to that because one of the fears on the regulatory side is they don't want to empower a company store type of approach where the mining town exists, the mining currency exists, you get paid in mining currency, on and on and on, and that's the advent W-2 workforce, and looking out for the little guy is has been very, very important. Right now, though, even the last 5 years, then the 5 years going forward, it's pace, right? Pace of technology is moving at a rate that is dramatic. So much so that, as I discussed with you yesterday, Alice Jacobson, who's runs government affairs for Payroll Org, mentioned in a talk that the technology exists right now to pay people immediately end of shift currently. And of course, that brings a big groan from the audience because as a payroll professional or an HR professional, you have all of these requirements that originate at the Fair Labor Standards Act uh, that you must meet. And in order to meet those requirements, whether it's Department of Labor requirements, the CFPB, Consumer Financial Protection Bureau, the California Department of Financial Innovation and Protection, the IRS, etc. Oftentimes, the way in all the players that participate in that, uh, you don't have the appropriate data and a speed that allows you to comply with that. And then there's usually no forgiveness by the regulators if you just said, well, it's not my fault, it's this other person's fault. The regulator, whichever particular regulator it is that you're dealing with, whether it be at a local level, a state level, or a federal level, just comes to you and says, Brent, that's not my problem, that's your problem. And we expect you to comply with everything that we've put in place, whether you're paying that employee at the end of shift or you're going to wait till payday, and we give you the time, the grace period for your established payday to gather all those things and comply with our rules and regulations and still give your employee the monies that they are required to receive on payday. So one of the other issues that the reason that becomes important is one of the other issues is you can't you have to be sure that the solution that you're offering your employee, even the solution they may desire, does not officially reestablish a new payday. So
Okay.
that is a technology component that comes into play where with your employment lawyer might say, well, that's great, Brent, that you guys decided to offer this particular benefit. But by offering that benefit, you have now established the fact that you don't pay once a week, you're now paying twice a week, and that Wednesday is now an official payday.
Right, because it's not considered from a legal standpoint necessarily limited to that one person or a
So it
one time.
goes,
It's not
yeah,
considered a one-time event. It's
correct.
considered a precedent. Um, um, that means, hey, you could payday could be any day.
And that's what your premise is that that's where we want to get to, correct?
Yeah, yeah.
And yeah,
That's fun.
and what?
Hold on.
Go ahead.
I'm sorry. You're. This is a rabbit hole, and we might have to do a second episode about this. But that's you're right. That's what you want, but at the same time, it gets you into some hot water with regulations as well.
It
That's a
can,
double-edged sword.
which goes to the fintech all being at Paycon, right? And
Mhm.
you were surprised by how many were there, and I'm kind of surprised too. A significant number increase over last year, and I think why that is that they didn't come here first. They didn't come to the payroll department first. They first went to HR, right? Or they went direct to consumer. And what happened? They were bumping into people saying, "Hey, hang on a sec, right? Here's all the ramifications if we go forward." And I think they were forced into showing up at Paycon, right?
Right, right, right. Yeah, yeah. This is, they have to go where the market is telling them to go.
Mhm.
And there are all sorts of factors that contribute to that, the regulatory framework being one of them. Uh, any sort of final thoughts for this episode on this topic, Brian?
Final thoughts would be that I believe it was so interesting to speak to you yesterday on the premise that people want to get paid where they want, most importantly, when they want, another important factor, and most importantly, how they want. talent. And that has always been kind of the rub between the individual who needs their money and the employer or the company, the business. And you're correct that the HR department, the payroll department needs to satisfy their leadership first, and then secondarily the employee on where they want their pay. And that's the elastic rubber band that keeps pulling both directions back and forth that we're always looking to solve to give eventually for in my business we don't make any revenue until that end employee is utilizing our product in a way that they're satisfied with. So you have to have that elasticity there to solve this side as well as to solve the consumer side. And I think the dynamics to the individual employee, especially as we move into this fast pace of AI, is going to be dramatic.
Oh, you brought AI into it. We almost made it through a podcast episode without mentioning AI, but
I'm sorry.
here it goes. No,
I'm
that's
sorry.
it's good. It's good actually. Thank you so much, Brian, for appearing on the podcast, and we will have you back.
Okay, great. Thank you.
Thanks for tuning in to the Future of Workforce Management and Payroll Insights by HR.com. We hope today's episode brought you valuable insights and fresh perspectives on the future of payroll and workforce management. Be sure to check out more episodes and explore resources at HR.com/podcast or wherever you listen to podcasts. Until next time, keep innovating and making a difference in the world of payroll and workforce management.